Welcome to the AAA Storage Podcast, your integrated real estate and development partner exploring all things self-storage investing to bring you diversified success. Let's dive in.
Hello, and welcome back to another episode of the AAA Storage Podcast. So today we are going to talk again with Paul Bennett. Thank you so much for joining. We are going to talk today about future trends, opportunities, and basically what to pay attention to in the self-storage and real estate investing industry. So my first question to you, Paul, is what are some trending topics for self-storage or maybe just real estate investing in general that you think our listeners, who are mostly investors, that they should pay attention to as well?
First, thanks for having me. I always enjoy getting together. The biggest trends and trending topics, and particularly in self-storage, we certainly look at all the real estate markets because they're related to each other at some level, but we tend to focus on the two asset classes that we build in, which is self-storage and office industrial flex. And specifically to self-storage, one of the trends that I think has been a pretty constant point of focus and conversation over the last several years is the professionalization and institutionalization of the self-storage marketplace. Although the majority of the facilities in the U.S. today are owned by private individuals, some refer to them as mom and pops. That's a little bit demeaning to me, but individuals who own maybe one or two facilities, usually in their local market. However, there has been a massive move in the industry that includes the large private equity groups and the publicly traded REITs, of which there are 5, are becoming a more and more dominant force in the industry. Their portfolios are widespread enough now that their strategy related to pricing and occupancy really drives the market, particularly in major markets. They tend to focus on maintaining occupancy at the expense of rates. So if you remember, I did a podcast with the Passive Pockets group a month or so ago, and the question was asked about the decline in self-storage property valuations over a 6-quarter period, where the data showed they had declined from $172 a foot to $139 a foot. The question was, are you catching a falling knife by investing in self-storage? That data is driven by the fact that rates have come down somewhat over the last year and a half, 2 years. It's come down because of the influence of the REITs and large private equity groups who are really using demand-driven pricing. They'll price a unit below where the market is just to get the occupancy. The reality is occupancy was at insane levels during COVID. If you think back to that time period, people were turning bedrooms into offices and had to have somewhere to put the furniture. They were at home with nothing to do, so they were cleaning out their garage and their attic. And the utilization of self-storage went through the roof. National average occupancy was about 98% during COVID. As we came out of COVID, it sort of went back to a more normalized level. And today, national occupancy on average is about 91%, which is sort of consistently where we expect to see it. But the trend I was talking about is the influence, the institutionalization of the industry, and the influence that the REITs and large private equity groups are having related to occupancy and pricing in the markets. I think another trend that's been significant is home sales activity. Home sales and people moving drive about 25% of the demand in the self-storage market. And the increase in interest rates has slowed the pace of home buying, which has resulted in fewer people moving, which has impacted demand on the self-storage side. So we link one to another is the impact interest rates are having on people's ability to acquire or build facilities. Higher debt cost results in sort of having to rethink the valuation and the cash flows that an existing property produces, and it also makes you go back with a sharper pencil in terms of the development process and what really makes sense. I think that the two good pieces of news that are also being talked about related to everything I've already said is, first, all the data shows a steady increasing demand for self-storage over time. If you look at the demographics generationally, you've got the boomer generation that I'm a part of that is hitting a point in life where we're downsizing, the kids are gone, we're moving to a smaller house, we're not very good at letting go of our things. We think one day the kids actually will want them.
They don't want it, Paul.
I know, but we haven't, that reality hasn't struck us yet. So we rent a self-storage facility and stick everything in it. And then you've got the Gen X and millennial generations that are just hitting household formation age. And that's the point in time at which people start to use storage. They're having babies, they're moving, all those kinds of things. So the demand data is very solid, and we're very confident that will be a consistent growing demand for self-storage. The other piece of news that may not be such a great piece of news or a trend for other people, but it is for us, is that the little bit of depression in rates combined with higher interest rates have really slowed a lot of development activity. The entire thesis of our current fund, not the entire, but the principal thesis, strategy of our current fund is that the drop in development activity, which all the data shows has already occurred and will continue to occur for about another 2 years, will lead to fewer new deliveries in the market in the next 4 to 6 years. As the demand curve continues to climb and new supply declines, what you get is a supply and demand imbalance that drives faster lease-ups and higher valuations. Particularly for the current fund, for our growth fund, we really tried to strike the timing to be in a position to sell into that seller's market in the next 4 to 6 years. There are some headwinds in the industry. I always like to remind people that self-storage has outperformed every other asset class in real estate in more difficult economic times. Even it is cyclical to a degree, and we're in a cycle that has been a little bit more challenging than some. With the demand for new properties from the institutional investors that are in the market, with solid demand data, and the fact that as a developer, we're seeing less competitors developing new projects in the markets that we're in, which means down the road, we think our facilities will do very well. So that's sort of a mixed bag of things, of trends within the industry that certainly everybody in the industry is looking at and talking about.
Mm-hmm. I like that you mentioned the kind of macro, like demographic picture, like you said, boomers and millennials, because both of those cohorts are the largest demographic cohorts, I think, in the country. Boomers, like you said, downsizing, and then you have millennials like me starting new homes and things like that. I'm curious, what do you think is driving the professionalization of the self-storage industry? What's behind that?
Self-storage is a unique asset class, and it, for the longest time, was really the domain of the individual investor. I live in North Carolina, maybe a little more rural than some of our listeners in terms of the area that I live in, but I frequently see a house sitting along the side of a two-lane highway, and next to it is a 60-unit self-storage facility. When I look at it and I ride by it, I know exactly what happened. The guy that lived in that house had a couple of acres of extra land beside him, and self-storage is not tremendously difficult or expensive to build. They usually have gravel parking lots. Maybe they have a chain link fence around them. But he just simply put up self-storage and manages it because it's next door to him, doesn't hire anybody to manage it, and it becomes mailbox money for him. It's a great way to use a little bit of excess land that you have next to your house. The industry kind of went from that to individuals who look for opportunities in markets to build or self-storage and operate it. As time went on, the institutional guys figured out that the returns and the stability, the risk-adjusted returns in self-storage equaled or exceeded almost any other part of real estate. I mean, I'll give you an example, Brandon. It still blows my mind. There's a group called Prime Holdings that is a private equity group. They've done other segments in the real estate industry over time. Their investors are predominantly institutional investors. They set out to raise a $600 million fund to acquire self-storage properties in 2022.
Wow.
The demand from the investor side was so great, they finally closed that fund at $1.2 billion.
Gosh.
In equity commitments. And that was in 22, early 23. Today, that fund is about 40% deployed, which means they still haven't found a home for 60% of $1.2 billion. Because remember, that's equity. Leveraged at any level, that's north of $2.5 billion worth of self-storage real estate that they're either going to develop or acquire.
Wow.
That didn't exist 10 years ago. It just wasn't such an animal in the marketplace. You've got everybody's heard of Public Storage. I raised money for Public Storage in the early 1980s when they were a brand that was known, but nothing like they are today. Today, they're the largest publicly traded real estate investment trust that solely focus on self-storage in the country. And I didn't look to see what their market cap is today, but I can guarantee you it's in the billions. And those players over time have evolved in the marketplace. You've got other private equity groups or names that people wouldn't necessarily know that have investments with operating companies in the hundreds of millions of dollars in self-storage. And it's simply because it's an asset class that provides good returns and is resilient and resistant to downturns in the economy. And that risk-adjusted return profile fits very nicely in the portfolio of these large investors.
So basically the market is maturing in a sense.
It's a different way to say. The funny thing is there's still over half the facilities in the U.S. are still owned by mom and pop operators. Right. It's certainly not fully institutionalized at this point, but we see that as an opportunity. We've sold property to virtually all of the major institutional players. We know them all. And that's our preferred exit. Storage King, which is backed by Anthony Gordon, which is a private equity group. They've got about $600 million invested in Storage King. I think we've sold them 7 properties. Those are the buyers that we tend to target when we take a property to market. And we think it's good for the industry. And the demand for new property and the demand for well-located quality properties continues to increase. It hadn't slowed down a bit.
So I know some of our listeners are probably thinking like, well, how do you know all this information? What kind of influencers do you follow? But another way of saying that is like, what data are you paying attention to? Are there like newsletters or economists or, real estate investors that you look at and look to read their stuff? I guess I want to paint a picture for our listeners that like, I know you guys are reading this stuff all the time and paying a lot of attention to what is happening in the world. Like you said, these are the kind of trends that the real estate world is talking about. Well, who is that talking about that? And how do you know? And can I go read them? Can I learn what you guys know? That kind of thing is what I'm after.
Yeah. Well, from a professional standpoint, obviously the answer to that question might be really different for an investor who's not in the industry.
Yeah.
But from our standpoint, there are a couple of obvious ones. The National Self-Storage Association provides a broad range of data and information about what's happening in the industry and transactions that are occurring. There's another group called Inside Self-Storage, ISS. They have a magazine and an online publication that really is focused on the industry. They also have an exposition or a trade show in Las Vegas. I think it's in April every year that we routinely go to, probably attended by about 3,000 to 5,000 people that are interested in the industry. There are a lot of professionals like us that are there, but there are also a lot of investors who are there to gather information and sort of learn different aspects of the industry. So that's a pretty valuable sort of event that occurs every year. They have a publication, like I said, on a routine and regular basis. We pay a lot of attention to the metadata that drives the economy. Self-storage is insulated from a lot of things, but it's not insulated from everything. Said a few minutes ago that 25% of demand in our market is driven by moving, which is certainly impacted by interest rates and other factors. So we track that data on a pretty consistent basis. Beyond that, on a macro basis, that's the data, the kind of data that drives the big trends. Obviously, as an active investor on behalf of the people that have chosen to invest with us, we really rivet on market data. One of the things that has changed, sort of relative to everything we talked about in the first section of this conversation, there was a time when you could take a dart and throw it at a map and build a facility wherever it landed, and you're going to be just fine. As the industry has matured, the market selection process has had to become a lot more sophisticated. We look at a tremendous amount of data on an individual site in order to sort of understand what the opportunity is. It's one of the things that has changed in the industry, and that is the availability of that data. Technology has driven a lot of things. And we can drill down on an address in any market in the country and tell you within 1, 3, and 5 miles of that location how many facilities exist, what total square footage of storage exists, what is the square foot of storage per capita in that 1, 3, or 5 mile radius. And we have metrics that tell us where the demand sweet spot is. It typically cuts off at about 10 square feet per capita. If a market has more than 10 square feet per capita of storage available, it's probably either overbuilt or starting to get overbuilt.
That's amazing that you know that. Okay.
Yeah, that doesn't necessarily apply to high growth markets. There are markets in Texas and Florida and other parts of the country that are growing, very rapidly, and they can absorb above that 10 square foot per capita level. But we tend to, that sort of typically is our cutoff. We can look at demographic data. I can tell you how many households, how many people, what's the average household income. That demographic, all data is sort of on the demand side, tells us a lot about a market. And then we can look at traffic counts. As influential as technology has become, and on the marketing side of our industry, everybody's focused on SEO and their Google presence and where they fall in a Google search and all that kind of stuff. More than 50% of the tenants in any self-storage facility still come from the fact that they drive by it 1 or more times a week.
Interesting.
So anyway, I kind of wandered off into 10 different, things. You asked me about influencers, and that just kind of gives you a sense of what's out there in the marketplace. From an investor standpoint, as I thought about this question, I don't know of a good source of everything I just talked about is really insider information that people in the industry look at. It's not bad information for investors to look at, but I would think most investors probably don't get that granular. One of the reasons we started this podcast was to provide a vehicle that could help make people more aware of data and information and dynamics and trends and opportunities in the self-storage and office industrial flex markets. And so I can't really give you a great, hey, go to this guy, read his newsletter. They're just not out there.
Subscribe to the AAA Storage newsletter.
Yeah, that's right.
That's right.
Exactly.
That's right.
No, but there is data out there, and it can be very helpful. One of the things we've said in some of the earlier episodes is our commitment to really educating investors and being very transparent. All of the data on every property in our fund that I just talked about a minute ago is available in our secure data room. I don't really expect investors to necessarily dig through it, but everything from the projections and the pro forma and the underwriting process that we go through to the market data, including that square foot per capita in 1, 3, and 5 mile circles around the property, which, by the way, we look at 10 mile circles, but 9 times out of 10, you're not going to get a customer from 10 miles away. Not unless you're in a market where there's just so little storage, somebody has to drive 10 miles. It is a micro market product. And that area out to 5 miles around a site is what drives everything in terms of success of a project.
That's so interesting. The between 5 and 10 miles, or what you said, like 10 rentable square feet per capita or something like that. That's fascinating that you know that down to that detail, and that microcosm of the market matters so much. I find that really interesting. Well, I know we have many more episodes coming in the future, but this has been really, really helpful, because part of what we hope to do with this show, Paul, is that we want to be that kind of reliable place of material or trends or knowledge base that people can go to with their questions about self-storage or real estate investing. And we hope that this podcast serves as that kind of knowledge hub, and we have a newsletter as well coming out very soon. So if listeners out there do have any kind of questions or anything, please reach out to the AAA Storage team. And I'm excited to keep these kind of topics going so that we can be that influencer in the market. Because, Paul, you have so many decades of experience with this, and I'm so honored to take part in sharing your expertise. And I'm glad for listeners to take part in that as well.
Yep, I always enjoy it, Brandon.
Okay, well, we will see you next episode. Thanks, Paul.
Take care.